It's fun to be with you live today to talk about the BBB Potpourri. What is that, Jeff?
It's the Build Back Better Act, the act that Congress is currently thinking about passing, which has a lot of spending. We got to pay for that spending by increasing taxes, and we're mostly going to be talking about the taxes.
We're going to talk about the taxes. There's more than just taxes, it turns out, in this thing, but there's lots of ways to spend taxes, which is not exactly the same as collecting the taxes. And why potpourri, Jeff?
So what we're going to be doing, how we decided to make this a little interesting, is it's a big act. There's a lot in it, so a lot of pieces have got a lot of airtime. For example, Scott and I have already talked about like the minimum tax on book income and how that's probably not a great idea. So there's a lot of the big pieces that people are talking about, but a lot of the finer points are not being talked about. So what Scott and I have decided to do for BBB Potpourri is we each have a series of questions we're going to ask the other person, and we are going to see if the other person can answer them, and then we're going to talk about what we learned from those questions and their potential answers.
And to make it more fun, we have not told each other what our questions would be because we're going to try to stump each other. But before we begin,
And because I knew that Scott would steal my best questions if I told him, and he would like go first and start asking my best questions.
that's very much possible. But let me tell you what I have done just for fun. This is not part of the Build Back Better plan, the BBB, but I do have a little bit of language from a tax act, and I want to check to see if Jeff knows what tax act it was a part of and what it refers to. Okay. In a certain tax act, there was a passage that read that a certain provision was enacted for, quote, an automobile manufacturer that was incorporated in Delaware on October 13th, 1916. So, two questions. Who was the automobile manufacturer, or which ones, if it's more than one? And second, what was the tax act?
That was TRA 86, and that was either GM or Ford, one of those big three automakers. This is like one of the most famous rifle shot provisions where you can literally just like pick out a single company and say, congratulations, you win, you get a big pile of money.
Okay, so you are correct. This was what was called TRA 86, which was the tax reform that was kind of famously and commonly happened during the Reagan administration. And the company that was an automobile manufacturer incorporated in Delaware on October 13, 1916, was General Motors. So this was a provision which was designed specifically to provide benefits to General Motors and only General Motors, not any other company. And these provisions, which somehow magically work their way into many, many tax bills, these are known as rifle shot provisions because they target one company as opposed to a shotgun approach where it targets many companies or big industries or something like that. So today we're not really talking about rifle shot provisions, but we are talking about things that are maybe buried in the BBB and might be sort of lost to the masses in terms of their people aren't paying attention to them, even though they might be in some cases quite important and quite big. All right, Jeff, I think you should go first.
Okay, so deviating from your theme, this isn't about a specific portion of the plan, but rather a more general question. Here you go, Scott Dyring. The number one question is, how many times is the word secretary used in the act?
Okay, well, I don't know that. I
Even just
do know that
close.
I'm going to guess there were 1,600 pages of text to the act, which I searched all the way through that using Control F, not by reading. And my guess is the
Wait, you're telling me you
words,
didn't read it in preparation for this?
I know I searched it for certain
Oh,
keywords.
you assigned me to read the thing and I read it.
Actually, not only did I read, I can't stare at a computer for that long.
Uh,
It's just too long, too many pages. So my guess is in the 1,600 plus pages of the current version of the act, the word secretary appears 327 times.
Incorrect.
How many?
1615.
Is it on every page or something?
It's pretty frequent in there. So do you know what context this is used in? You understand the concept of secretary?
My guess is it might have something to do with the Secretary of the Treasury providing interpretation, which actually in the end might do more to affect the way the law is interpreted than any other thing.
Yeah, correct. So it's not just the Treasury, it's the Secretary of everything, right? So they'll talk about something that affects commerce or agriculture, or so you have all these secretaries, and the law basically says something like, the secretary will interpret this. You have that more than 1,000 times. And what that really means is we pass the BBB, and then we're just going to have to sit around waiting for all these secretaries to tell us what the law actually meant. And so this happens with like every time we pass a law. We pass Dodd-Frank, for example, and it can be years before we actually get like the refined guidance to understand what the law actually means. And the awkward part of that is, we're going to pass the Build Back Better Act if it happens. And it's not like companies can just like wait for that guidance and not do anything. They still have to file tax returns. And so they're going to be filing the tax returns without the guidance, without the secretaries having told them what to do. Every time you pass a large piece of legislation like this, it's just a lot of uncertainty, and a lot of people don't know what to do because they have to wait for these secretaries to tell them what to do. And again, more than 1,000 times it says the secretary shall do this or the secretary shall do this.
So my recollection with the Trump tax acts, one of the big provisions in that was called the GILTI, the Global Intangible Low Tax Income, and the secretary did not provide the guidance for that for quite some time, which left a lot of international companies a little befuddled, not knowing exactly how to proceed.
Yeah, again, you got to fill out that tax return, but unless the secretary tells you about some little tiny details, you might not know how to do it. So I was actually talking with the person who helped write the regulations. So when it says like the Treasury shall provide, you're right from the Treasury context, you're writing these Treasury regulations, who helped write them after the burp. So this is the last time we taxed book income, a major piece of this legislation, and he did this in the late 80s and 90s. And he told me that even after the law was no longer a law, they were still writing these regulations. It just kept on going because you have companies who would take a tax position not knowing what to do because the secretary hadn't provided any guidance or hadn't been a reg about the issue. And the IRS would challenge the position and they'd be litigating, and this can like go on for quite some time. So even like years after the law was not even the law anymore, they still needed somebody to write the regulations so they could interpret it so that they would have some basis on which to act.
Okay, so I forgot to mention this, but I want to invite anyone out there to chat questions. And one has come in, which I think I have an answer to, but I'm curious to know what you think too. The question is, can the president tell the secretary how to interpret the law through some kind of an executive order? What do you think?
I have no idea. It's the kind of thing that I like poll my friends when I'm faced with such a question.
Okay, I don't know with certainty either, but I am almost certain that the president could, at least at a minimum, influence the secretary.
I mean, the president picks the secretaries, so it's not like they're two independent bodies.
And I do recall, even when Obama was president and there was a little bit of an inversion wave, one of the ways to stop the inversion wave basically happened through a Treasury regulation that was an interpretation of something that already existed. And clearly there was a little bit of political connect. The politics are not absent in the secretary's interpretation. Let's put it that way.
Correct.
Okay. All right. My turn to ask you a question. All right. There is a new credit which is being proposed, which will potentially affect commuters, primarily in urban environments. Do you know what it is?
Well, there's probably a lot of them, right? So there's like, my guess is, and I haven't actually read every page. There's like stuff to do with rail, and if you're riding on trains, that's going to affect you. There's certainly things to do with electric vehicles. That's going to affect you.
You're getting warmer.
You really want to get it? I don't know. What is it?
Okay,
you tell me, Scott.
There is a new credit being proposed for e-bikes.
Oh, I forgot the e-bikes. Yes. I saw this.
Okay. And this is actually going to be related to what you just talked about, but the e-bike credit is a 30% tax credit 30% of the purchase price up to a purchase price of $5,000. So the credit
And it can't have more than like 750 watts or something. There's a wattage limit on how large the e-bike can be.
There's a wattage limit. There's a speed limit.
Which the wattage limit, I thought like, the people of girth like myself, we need a lot of watts. And so this is going to limit our ability to buy a large man sized bike. Anyways, yeah.
Yep. So there's a credit. Now, here's some interesting things about this credit. The first is there's a phase out. So if you make more than about $150,000 as a married filing jointly return, it's a little bit less if you're filing single. After $150,000, it starts to phase out. So if you're making a decent amount of money, no credit for you. The second thing is I can easily think of a way to game this system, which is I might purchase a $5,000 bike, and because I pay taxes, claim the credit for $1,500, which makes it effectively only cost me $3,500, but then take that bike to eBay and sell it for anything over $3,500, and I would make money. And then I would just go buy another bike for $5,000 and so forth, right? And in other words, I'd be making money. But there's a little provision, which is it says the secretary shall provide for a little thing called recapture. Do you know what recapture is?
Yeah, like with a depreciation recapture.
Tell us what it is.
So it's like if you take a tax benefit and then you sell something that was affected by the benefit, somehow that benefit is figured into the basis of when you resell it.
Yeah,
in
so
complicated tax language that probably nobody just understood, but it's fine.
Yeah, so the idea would basically be if the government gives you $1,500 benefit and then you end up selling this thing in such a way that you end up selling it for maybe more than what the net cost to you was, you're going to have to pay taxes back to the government on this little thing. So recapture, it turns out, is a huge issue, not so much with e-bikes, but it is a huge issue with things like, for example, depreciation. So we live in a world right now where there's bonus depreciation, meaning that you can expense all of your the cost of like a machine all in 1 year. So I recently had a conversation with a former student who's now working as a consultant and consulting a large agriculture company. And one of their proposals was to buy brand new tractors every single year so that they could depreciate them 100%, which is true. They can do that. But of course, when they sell those tractors at the end of the year so they can buy new tractors, there will be what's called depreciation recapture. So the benefit isn't as amazing as it sounds at the beginning when you think, oh, I get to like write off, $500,000 per combine that I purchase every single year. Doesn't really quite work like that because you're going to end up having some depreciation recapture.
Doesn't roll right like that for a tractor. That was very clever.
Doesn't roll right.
Back
does
to
not
your,
roll like
your
that.
rural roots and understanding how tractors roll.
I was actually really happy that one of my Fuqua students was calling to talk to me about two things I love: tractors and taxes. It was amazing.
Yeah. So the e-bike incentive, my understanding is it's a refundable tax credit. So even if like you have very little income, you'll still get the money back from that. I don't know whether it applied to the used market. That is an important thing. The one thing that your little example neglected, which is a huge issue, Scott, is you said the price is $5,000. I'm going to get a tax credit for however much money you said. And so then I can resell. So you're assuming the price isn't going to change with the tax credit. So you assume something about the tax incidence of the credit that would, that basically buyers would capture all of the value of the credit. So that's kind of up for, what do you think about that?
Hang on just a minute.
You want to repent of that error?
No, yes, but I want to repent of it later because in one of my second questions, one of the points I want to make is incidents. So let's hold off on incidents because I think I can illustrate it better in a different
You only have so many questions and you don't want to destroy your next question.
Don't destroy my next question.
Okay.
All right, you're up.
I'll allow it. Okay. I'm going to ask a question that I do not know the answer to. How much does the Build Back Better Act weigh?
You mean the paper copy or the electronic copy? I would say the electronic copy would not weigh anything.
The paper copy, of course. What are you talking about? Electronic
paper copy, 1,600 pages. those reams of paper that we have here in the office, I think have 500 sheets. So that's roughly 3 of those. My guess is picking those up 10 pounds.
Okay, so I have enlisted the resident expert printer in my office, John Hand, another professor at UNC, who has printed the entire Build Back Better Act. Here I am holding it up in front of me. It is really, really, really large. I have a scale. We're going to weigh it on the air here, and I'm going to tell you exactly what it weighs. It weighs, and I can't go more than 10 kilograms on this scale, so hopefully it doesn't do that. So it's 170 ounces.
Well, divide that by 16 and tell me how many pounds. That's almost 10 pounds. I was almost exactly right.
It's coming in pounds.
Well,
it is. Wow, this is amazing. So it's 10 pounds, 10 ounces.
10. I'm pretty good.
Yeah, that's pretty good actually.
Okay, so here I have a question for you. How many of the members of the House of Representatives do you think have actually read the bill that they're going to vote on?
Oh, I don't know that it's that interesting or that controversial. 0 have read it. I don't know that anybody has actually read the whole thing. Well, I mean, that's probably not true, actually. I'm sure there's some people at this point that have read the whole thing. Yeah, it's big. I mean, what's interesting is like you've been throwing around this word 1,600 pages. There's been various versions of this. The November 3 copy that I have behind me is 2,135 pages. And what's fascinating is even just like in a few days, they came up with a version. They came up with a new version. There can be hundreds of pages of difference between these 2 pages. And it's like what came out, what came in. You know, when we're writing academic papers and you have a co-author that forgets to track changes, you use like this word thing that like tells me the differences between 2 documents. Imagine doing that for a document that's 2,000 pages long. Like at some point your head just blows up and you can't keep track of the changes. Okay, that's my question.
Okay.
10 pounds, 10 ounces. I looked everywhere on the internet for it, didn't have it. So we came up with the empirical estimate of that important fact about the act live on the air. Okay, go.
10 pounds. All right. So you mentioned electric vehicle tax credit. One currently exists and it is being updated and modified slightly. Do you know what the updates and modifications to the electric vehicle tax credit will be?
Let me guess. To get bigger?
Yes.
I think the old ones only applied to new vehicles. Do they incorporate used vehicles now?
Nope. But that's a good guess. That was a good guess. Any other guesses?
Bigger?
Yes, bigger is true.
Shinier? Are they shinier?
Not shinier.
Let me think. Oh, hold on. No, I know this one. Okay, so yes. You got to like make the cars in a union factory.
That is
or the batteries in a union factory. They got to be made in America.
Yes.
The components have to be made in America.
Yes.
Which has a lot of fascinating implications, actually. Is that it?
Yeah, that's it. Okay, so that's very good. So there's actually one other facet too. So I'll talk about all the facets, then we can discuss them. Okay, so the current electric vehicle credit, as I understand it, caps out at like $7,500. Okay.
Yep.
The new one will be bigger. You can get an extra $2,500 of credit if the vehicle was assembled in the United States and the battery was built in the United States. And you can get an additional $2,500 if the vehicle was built by a unionized workforce. So that's how you get to $12,500. It also will remove the cap on the number of vehicles for which this credit can be used per manufacturer. So in the old bill, each manufacturer could only allow purchasers of their vehicles to claim the credit for the first 200,000 vehicles sold or something like that. That cap, my understanding will be removed, which would be great for a company like Tesla. But it's sort of interesting because I don't believe that Tesla's vehicles would qualify for these additional $2,500 credits because they are not unionized and Americanized enough to qualify. Okay. So then the other thing is it's a refundable credit. And then the last part is my understanding is this has changed around in different versions of the bill, but I think right now it will begin to phase out for income of married people. I think the last I saw was 500,000 in income, although I have seen 800,000 thrown around too. So,
Whenever
um,
they have these limits of 800,000 or things like that, I just think like, that's a lot of income. Like $800,000 a year. We throw it out as if like, oh, I mean, every like normal person on earth makes $800,000. That's a crazy lot of income for almost everybody in the United States. And
that's
yet that's
true,
when we
but
start phasing it out.
that is true. But at current rates of inflation, it won't be long before we're all making
That's
$800,000 a
I
year.
sure
So,
hope they keep up with the inflation. So I used one word that I want to be clear that everybody's on board with. So it's the word refundable or refundable credit. So for a credit to be refundable, so most credits, like if you get the credit and you don't have any income, you're simply just like out of luck. Maybe you can use it next year, but it doesn't actually benefit you. A refundable credit, the most famous version of which is the earned income tax credit, is you actually can get money back from the government for doing whatever the credit incents, even if you have no income. So
so
this means
the government will
they'll
send you a
send you a
check.
check. If I made no, if I was unemployed and had zero income and somehow bought an electric vehicle, then they would send me a check.
That is correct.
Which is interesting for the earned income tax credit. It actually gets into the problem. It like makes it way more susceptible to fraud. I don't know whether that would be a problem with the electric vehicle.
Okay, but now, so that's a really important issue,
Oh,
refundable, which we talked about. A second issue, which you raised earlier on my first one that I want to talk about now, is this issue of what you called incidents, or
yep.
who kind of gets the benefit of this. On the surface, you would say, oh, the person who buys the car is better off because they they end up paying less for the car after they get their tax credit. But of course, Tesla's going to know, or whoever, whatever vehicle manufacturer is selling this, they're going to know that it's cheaper for the purchaser. So they might raise the price, in which case the manufacturer might receive the benefit of this tax credit. But of course, the people who are selling supplies to the manufacturer will know that this is the case, in which case they might charge more for the supplies. So, who exactly benefits from a tax credit like this is a very tricky question to answer. And it is related to this idea of incidence, which is the idea of who bears the economic burden of a tax or who receives the economic benefit of something like a tax credit. Now, I don't know if you know this, but just last week, I think it was last week, Tesla raised the prices on its vehicles. A very cynical person could say, oh, well, they're looking at what's in the legislation. They're seeing the tax credits are coming back and they're raising their prices in anticipation of tax credits. I don't know. Nobody knows. I don't know. What do you think?
So there is empirical estimates on tax incidence of electric vehicle credits, specifically for electric vehicles. Have you seen this work?
I have not seen it.
So there's a paper on when the Prius first came out. They used the credits afforded to the Prius. And I'm just going from memory, but my understanding is they basically find that most of the benefit to the credit was given to the customer, to the actual purchaser, despite the fact that you wouldn't think that that would be the case because there was a very limited number of Priuses, and you'd think that Toyota could have just like increased the price of Priuses to capture all the benefit of the credit. And then they have some reasoning for why that's the case. Now, that was a while ago that paper was written when I would say the electric vehicle market was very different. But so this is something that's been looked at a little bit.
Here's my guess. My guess is as long as there's a viable gasoline competitor, it might be more likely that the consumer receives the benefit, because if the manufacturer tries to take too much of the benefit, the consumer will just switch over and buy a gasoline car.
The question is, what is too much?
That I don't know.
Yeah. So one thing that I think was a huge deal about this electric vehicle credit that we kind of have completely skipped over is you said that the credit will be if you have a unionized, if it's like the batteries are built by unionized labor. So far, the tax code does not have to define in very many places what unionized labor is. And it turns out not to be simple. Likewise, like defining precisely if something is made in the United States is not simple either. And so you not only are you going to have to define those things, I mean, the secretary will likely define those things in extremely intricate detail in the upcoming years, but then it's going to be some IRS agent's job upon audit to determine whether or not like this battery is unionized enough, which I think is pretty fascinating, right? We usually think of IRS auditors as looking at expenses and income and looking at the tax law that relates to those two different things. now they're going to have to verify this type of thing. Now that isn't crazy. We have other incentives that are also strange like that, for which there are tax provisions that require that kind of verification. But your IRS auditor is going to have to come in and say, like, is there enough union in this shop building these batteries to get this credit?
So, by the way, an article I read, and I have not verified this personally, so I don't know, but in an article I read said that the only electric vehicle currently on the market that would qualify for the extra $5,000 in credit is the Chevy Bolt. So there you go. Now, here's a question. Not about tax code, but just about your personal desires. The Rivian all-electric truck is coming soon, and Rivian is going to IPO, I think, soon. So two
Yes.
questions. Are you going to, one, buy Rivian stock? And number two, are you going to buy a Rivian truck?
The answer is I will not buy Rivian stock instantly. Once it ends up in some large index, which I hold, I will end up holding Rivian stock, but I'm not buying it up on its IPO. I'm not smart enough to like decide which of the winners or losers are on an individual basis. And number two, a Rivian truck. Likewise, I'm not going to buy one right away. If I update the truck I currently have, or probably with another truck from the same manufacturer, so I'm waiting for that person to come up with an electric vehicle. I wouldn't actually mind an electric truck. I think they're pretty neat looking, and I don't drive like very long distances in my truck, so I could go for an electric truck eventually. Probably a decade after you get one, because you got the money and you buy fancy things first.
That it's that turkey farm money that I inherited that you often refer to.
Yes.
Okay. I think you're up. Next question.
Okay, so here is another aggregate level question. Again, I think we're doing different kinds of questions, but that's fine. How many different dollar values are there in the text? So that is to say, that'll say something like, this person gets 3 billion, and this entity gets 5 billion. We're going to spend $500 million on this. How many different dollar values are there in those 2,000 pages of text?
So in other words, if I search the text for any digits that are preceded by a $,
Dollar sign with some commas and a decimal at the end, or maybe no decimal, but yes.
Yeah. My guess is that's got to happen 10 times per page. There's 1,600
10 times per page?
Yeah. So I'm going to say 1,000. I'm going to say 16,000 times.
No. 10 times per page? Just look at a page. It's not on there 10 times. Okay, so it depends on what you mean. If you mean actual like dollar values that are going to hand it out to somebody, it's different than just dollar values, right? So the dollar value at which something phases out or something like that, we're just going to go aside. But for my estimation, actual little like pools of money that will be handed out.
Okay, that's different. I answered the wrong question. My guess is pools of money that are going to be handed out, 200.
I'm saying 700. And again, there are, just the way you would search for this on a computer, that could be wildly off. But there are many, many hundred. And kind of that is the whole point of the exercise we're doing here, is that we're going to talk about like the three biggest things, or the one biggest thing, and we're all going to get upset about that, and we're all going to like talk about it, and supporters are going to say why it's great, and detractors are going to say why it's horrible. Well, there's hundreds of other things that just aren't getting that much airtime, some of which can be big. Sure. Okay, are you ready for an example of one that could be big?
Yeah, I am.
Okay, so I'm going to do two questions in a row, since the last question was kind of short.
Okay,
so why are trial lawyers especially excited about building back better?
Trial lawyers?
Trial lawyers, yeah.
My guess is there's going to be a tax credit for paralegals. I have no idea.
Tax credit for paralegals? You really just like made that up.
Totally made it up.
Okay, now, incorrect. We should have got a buzzer sound. Incorrect. So trial lawyers are excited because currently, if you work on a contingency fee, the contingency fees that you get, you have to treat as like a loan to your clients, and you can't basically take those as an expense. The expenses you have when working on a contingency fee, you can't deduct them until you actually collect some settlement, or until like the whole thing is done. So you can start having all these different fees, or start having all these expenses, and it could be years down the road until you actually deduct them. The Build Back Better Act allows contingency fee lawyers to be able to deduct right away.
Wow.
So why is that important? Well, on its surface, you might think, it doesn't seem like that big of a deal. And then you say, look at the revenue estimates, and it's like a few $billion. I mean, what's $3 billion here or there? It's like nothing, right? And then you think, okay, so we just shouldn't worry about this. But one important thing is like even a small thing, if it changes incentives, it can have a big impact on things, right? So what is a contingency fee lawyer? It's a lawyer who goes out, finds a client and says, look, I'm willing to sue somebody on your behalf and you'll pay nothing unless we win. So what are these people? I mean, these are literally like the ambulance chasers of the world out there trying to find clients who are willing to allow them to sue. And this is where like a lot of our frivolous lawsuits come from. Now, certainly there are contingency fee lawyers out there doing good things, but it's also where a lot of frivolous suits that really are a big friction on society come from. And it's basically a tax incentive to make it less costly on an after-tax basis to engage in frivolous lawsuits. So the actual revenue estimate might be $3 billion, but you really can, I mean, it's a big friction to have people out there that can now sue on a contingency basis cheaper.
So once again, we have evidence that taxes influence every aspect of our lives. So by the way, another odd thing, did you know that there is I think you knew this, I think maybe you sent this to me. There's a little provision in there for a tax credit for journalists.
Oh yeah, the journalists. We got to give the money to the journalists. The local. It's not any local journalists.
Local
so we're going to have to define what local means, I guess. Like in the little village of New York, I suppose the New York Times will be like the local journalist.
Okay. There's also so I'm just going to tell you the last. We don't have time to go through all these, but I'm going to tell you the last two things I was going to bring up. There's a thing called the American Opportunity Tax Credit, which is basically an education tax credit. It's refundable. Phases out after a certain amount of income, but in the existing law, you are ineligible for that tax credit if you, as the student, has been convicted of if you have a felony drug conviction.
Oh, I saw this. This is
so ridiculous. The new law will retain the tax credit, but it will remove the portion that says that those with felony drug convictions are ineligible. So they will become eligible. All right. That's one. I'm just going to talk real quick.
Sorry, to be clear, when I said it's ridiculous, I think it's ridiculous that it existed. I think if we want anybody to be able to get educated and improve themselves at a lower after-tax cost, it's people who've had problems in their past. Why would we want to punish them?
So Jeff believes in redemption, which is a good thing. Okay. The second one is there's this thing called the Advanced Manufacturing Investment Credit, which is a credit that will be provided to American companies for buildings and machines related to the manufacture of semiconductors. The idea is they're trying to bring the manufacturing of chips back to America instead of having them all be manufactured abroad, say, for example, in China. I found that fascinating from an economic point of view, that we're trying to bring chip manufacturing.
The Doritos lobby was successful again.
Yes, that's right. Exactly. All right. Any last words?
I got nothing.
Of course, Jeff always has something. He's just restraining himself.
I'm going to restrain myself, yeah. But I mean, this is a complicated thing, and I think it's fast, and it's been fun to go through the details, and it's good.
Okay, so for those of you who are not aware, if you're interested in listening to this again, you can find it here on YouTube, or you can find it on the podcast, Tax Chats, which is now available on all major podcast distribution platforms. And if you're really excited about what we're doing here, you can go to taxchats.org, where we list the podcast. And we also have a feed from the blog that Jeff runs over at UNC called The Write-Off. And you can find additional information there. In addition, we are also pushing out a few short podcasts, which we call Tax Shorts, which talk about, in 3 to 5 minutes, different tax issues. And those will not be on YouTube, at least for now, but they are on the podcast, so you can find those there. If you like that stuff, obviously feel free to subscribe and you'll get notifications. They're short, they're hopefully informative, and we think you'll have fun listening to them. All right, that's it. Thanks for joining us, and we'll catch you next time. Goodbye.
Goodbye.